damn phones. Babylons can't crack the code.
Alright, welcome to B-MoneyTrading. We're going to make this really quick. I'm going to talk about my positions. I took new positions and I added on to some, as well as where I ended the day and where I'm at for the week. And then I'm going to talk about support and resistance. So if you'd rather hear about support and resistance, go ahead and fast forward. I'm just going to give a quick crash course on support and resistance, and maybe I'll do another video that goes more in depth on that. Someone was asking about it. I never did do a Q&A Wednesday. I was so tired last night that I tried doing videos and they were coming out complete crap. So I decided just not to post anything up and get some sleep. And so here I am. So moving forward, I ended the day down about $12. I'm still up for the week, but not by much today, and then previously you can see that it has, I've had some way down, but December 3rd I was up $260, and this is where I'm at now. Ultimately though, I am gaining and making progress, and ultimately that's the most important thing, is that I'm making money over the course of time, not losing money. We're not looking for big gains in one day and then the rest of the week just complete shit, excuse my language, but just losing, and watching money bleed out left and right. Now with that said, now if I'm going through an accumulation cycle, then that's one thing. But if I'm done accumulating and it's continuing to break below what my strategy or game plan was for that trade, then I have to consider starting to scale out and take some off of my position, and then maybe buy it back later on down the road, or just get out completely. I have done that before. The most recent one I did was on when they came out with news of secondary offering in after hours, and I was up $50, and then that night they came out with the news, and so I woke up the next day. Well, I actually read about it before I went to bed. I knew it already tanked. It was too late for my order to execute, so I had to wait until the next morning, and I went ahead and got out for a $20 loss, and then I ended up making that back within a trade that I did with USO, and some profit off of that. And anyhow, so sum it all up, we're looking for a strategy that works over the course of a long period of time, not just temporary, a band-aid for right now. We're looking for something that consistently works over a course of time. And so the way I've been trading, that's what it has been doing. So what I look to do tomorrow is add another 200. I added 200 the other day, and so now I look to add 200 more tomorrow. I had a good week. I had a lot of money left over from after paying bills and savings and retirement and taking care of my responsibilities. I still had some play money left over, so I went ahead and added 200 to help continue to compound and for the account to grow. But I do add at most 200 every Friday, and so that's what I'll do tomorrow. And then on top of that, I will up my tier on Robinhood Gold, so I'll have another $1,000 of buying power. Right now, I added TQQ 5 positions. I'm up in this trade like $17, and I bought those today. And you can see real quick, 5 shares at $44.59, and it's going for $48 right now. And then I added 5 shares to CGC, still down in that trade. I believe it's like $135. But this one, as well as ACB, or a long-term trade. And then I'm down in Apple, not too thrilled about that, but I added to CGC 5 shares. I added to ACB 20 shares, and then I think that is all that I added for the day. Oh, I think I might have added to Carvana. Let me look really quick. I gotta make this fast. Yeah, I did added 5 shares of Carvana, and I've been in this trade for a bit. I know how it trades, and I'm happy with how it trades. And last time I was up in it, my only regret was I didn't take a bigger position. So that's why, even though I'm down in it, I added onto it. It was a good price point for me to add. Okay, so moving on now to support and resistance. We're gonna make this really quick. We're at the 5-minute mark, and I'm trying to make these videos a lot shorter. So here goes the SPY. So support and resistance. What makes support and resistance? Price action. And price action is a point of, on the candlesticks, a high or a low of a general peak. So we can see like a mountaintop that these are peaks, right? And so basically, if I'm looking for support and resistance, and like today, it hit a support area. And so if we look and we see, okay, we're looking, this is the 4-hour 180-day chart. Now you can do this on a smaller time frame. Doesn't mean that the support and resistance areas are going to be as strong. They're going to be for that past few days or whatever looking back. But if you were to look at this time, if you're looking at this chart and you see it's down here on a smaller time frame, and you have this long draw on, like, so we can see right here, that's where it's at. So I go to the 5-day chart, and that line is still there. So once we saw it hit that point, you can see that it automatically buying came in and it went up. This was on the SPY, but we can do this on other charts as well. And then resistance is other price points, and you can see that once it hit this, it broke through it, but this was in after hours and kind of stuck around it. So with that said, we're gonna go back to the 4-hour 180-day chart. And so we know that it hit this point. Well, if we look back, then we can see it hit it before previously, a few days ago, whatever, and like a month ago it hit it again, and if we keep looking back in time, we look for any other areas that might have hit it. Now in this area, it could have been more resistance. And basically what happens is, once resistance gets broken through, then it becomes support. So we can see that it broke through, which now this is support, but at one point it was considered resistance here, and then it broke through it, and so then it became support here, and semi here, and here, and here. Then it broke back through it and became resistance, but it was able to push through. And so this is what support and resistance is. So we look here at the last time it had a peak, and we see it peaked here around the 280 area, right? 281, roughly, we'll say 281. And we look back and we see, well, it did it around the same area, and it did it again. And then if we look back in time, we can see, well, it was support here, but because it broke through it down here, now it's made that area resistance. And so it came up, hit it, made it resistance, came back down, and then when it did come back up, it hit it, it was able to break through it, so it was resistance. So the next time, if it's able to break through this point and get up above, then if it ever does come back down, it looks like this will be a area of support, because it was resistance in previous time. And so we look back here, support, we see here it was resistance, and that's that. So that's pretty quick sum up, and you can go into more detail and look, and we can get more defined on the exact price it was, and then if we break down a smaller time frame, we'll try and do this with like I don't know which one would, I'm trying to think of something that would be, we'll see the ACB do on a small time frame and see if there's, so this one, if we look back, we can see that this area maybe would be kind of considered a support area, and I got this on here, so we'll go like that. And basically the reason why I'm saying that is we see that this defining point dipped and it hit it and it came back up, right? So then we see yesterday that it came and it hit it and it just struggled along it. And so people were watching, because if you look in the previous day, I pointed out that it dipped hard and wasn't able to break below this point. So people are watching today, but they're also looking back in the past, and they see that the other day wasn't able to get below that. So they're watching, and you see this battle between the bulls and the bears, and then eventually the bears win and it comes down, and then after hours it's up, and then we see this huge gap down. And now day traders are watching this because it had a gap down, and so it popped up on a lot of scanners. There are settings that you can put on scanners, and there's pre-made scanners a lot of times. I think Think or Swim has one. for gap ups and gap downs, and so this probably hit a lot of scanners because it gapped down, and so people were looking for it to make a gap fill today, and that's basically what it did. But as you can see here, is that it hit this point out, right, that it dipped previously, and so on this day people are watching it, and it blah 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 blah, like you can see it had trouble breaking through that price. Well, so then a day when it did this gap fill and it got overbought, that this point was going to be a resistance area, and it got close to it. It didn't exactly test it, but it did get close to it, as we can see, and then it had another sell-off and then found some type of support. Not a defined support area right now. Now maybe if we look on a bigger time frame, it would be. For me, if I was to day trade something, I'd want to see on multiple time frames a certain area. And so if I can look and see that this was a previous support area, like we can see here, do it right here, we can see here that it hit here before in previous time and it acted as a support area, so people are watching it. And so when it came down here and they saw, so and then when they saw that it hit this area, wasn't able to break through it, then it was looking like it was gonna come back up. Another thing people watch a lot is the EMA, exponential moving average. There's also the simple moving average, and I'm not going to detail the difference between those, but basically people will watch to see which one does it show more respect for. See, on this one it seems to be holding the 9-day EMA right here. Doesn't mean along the way it can't change and start showing more respect or more, reaction towards the 20-day EMA, but right here it's showing that it's just sticking along with the 9-day EMA, that each time it tries to come up it hits it, comes back down, and this is on the 4-hour 180-day. But my point is back to saying is that if I see here that this on a bigger time frame is a point of interest, in that for some reason when price action gets around here, it has trouble either breaking below it, or if it does break below it like it did here, then it's going to have trouble getting above it. And so people are going to watch for this area, and then on a smaller time frame when it gets to this area, because if we look, we go on the 5-day 5-minute, this line is going to show up, and so we see it here, and you can see that people are watching it. It's an important area, and so a lot of being a good trader is being patient and disciplined and well disciplined, and you'll find some traders that are disciplined enough that they won't buy. They will sit here and watch this thing all day. They may put in an alert, and they can do that on here. They can go down here, create alert, and we can put it in the price. This price is like 538, so we can say so we have enough time that when it gets to like 548 at or below this price, then we can put tell it we want to hear it ring, and that way we know that when it hits this price that it's time to, so I can go pull, close this and look at something else or look at different stock. Then when it gets close to hitting that price, I'll hear it ring, and then I can go, oh yeah, and it'll show a notification saying ACB has hit 548 or below, and so then I'll hear it pull it up and look, and they'll give me a chance to look to see if I want to buy in, or if I want to short it, or or if I just want to not take the trade because it's not in my game plan, or whatever the case. But hopefully I've had a game plan for this trade, and that's why I put the alert. But anyhow, that's some of the options that you see traders do, different things that they do, and so this hopefully helps at least one person that's watching this as far as learning what support, resistance is, and then things that other traders tend to do. And basically you want to be looking what everybody else is looking at, because that's what's going to make you money. If you're the Lone Ranger and you're the only one buying at a certain point, then it's not going to really move. You need to be either the first to the party and the first one to leave. Basically, you bought before everybody else down here, and as it went up, you sold in to strength, and then because the person that was last to the party bought up here going long, and they were the last one to leave the party and sold down here and took a big loss. So anyhow, I'm getting off track. We'll go ahead and wrap it up. It's 15 minutes, some pretty good solid information, I believe. Probably one of the better videos I've done so far. I'll have errands to run in the morning, so I will not really be able to be involved in the market until about 10. Like I said, I'm adding 200 to the account tomorrow, and then I'll have $1,000 of buying power on top of what the buying power is I have now. And so right now I have like 760, plus with that 200 would put me at 960, and then another $1,000 of buying power. So I have about $2,000 worth of buying power. I'm holding right now. I have $5,000 worth of buying power, and I've used about 4,340 or 240. So I'm holding about $4,240 worth of stock right now, and I'll have $2,000 more tomorrow of buying power. So with that said, go ahead, call a night. Also, another thing I probably should cover sometime soon for new traders, as far as margin and margin calls and how Robinhood does it. If you look to get Robinhood Gold and margin, that just because you get it doesn't mean you're gonna be able to spend that money on cheap stocks. They'll only allow a certain amount of the money that they're loaning you to certain stocks, because if they're highly risk volatile stocks, cheap penny stocks, then they're probably not going to be willing to give you that much money, because the likelihood is that your risk is really high, and they loan money based upon risk and volatility, and basically that's how you should probably manage your trades, as far as based on risk and volatility. And so, as I say, your success as a trader is going to be well depending on your ability to manage risk and mitigate risk. And just knowing a good risk to reward ratio is not managing risk. You know, you can get in a high volatile trade with a risk 1 to reward 3. So for every, you're risking 1 to get 3, but if you're dumping your whole account in that, and then you buy at the worst time possible, then it wasn't even a risk to reward like 3 to 1. It was more like you're risking 4 to get 3. So it's basically backwards almost. Anyhow, now I'm kind of just jumbling, talking. Anyhow, we'll wrap it up. I'm tired and I need to get to bed. Got an early morning. Hopefully this helped, and I will see y'all soon. Have a great night, and just focus on managing risk above all. The better you are at managing risk, the more likely you are to be profitable.